This is one of my favorite webinars to do each week, the overnight trading webinar. Actually, the last time we did this one was 2 weeks ago. Last week we did EAs and copy traders, and that was a pretty good call. But excited this week. I've got some cool back testing that I've put together on the overnight trading strategy. I want to show you guys how to trade it. So we'll probably do that first. I'm going to go through everything from taking the trade to keeping a journal with the strategy, how to follow the sequence of trades. And then at the end, we'll share the back test and forward test of the strategy and how it's been working. So I think you guys will really enjoy this. Before we get started, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go ahead and get started. Like I said, what I want to do first is show you how to trade the strategy. And then what we'll do is we'll jump into the journal, then we'll jump into the back test and all that kind of stuff. So first of all, this overnight trading strategy is meant to be traded every single day. So if you're going to trade this, there has to be a level of discipline to be able to take this daily, right? So if you're somebody who struggles to, stay consistent with something, you're probably going to give up on this in a few weeks, right? You probably won't stay with this too long, just because it does require your ability to trade this every single day. Because if you miss a day in the sequence, because the sequence is important, we'll talk about what that is. But if you miss a day in the sequence, it's very difficult to get back on track and know where you left off, because the way this strategy works is it builds off of the previous day. So if you have a losing day, the way we approach the market the next day is different. If you have a winning trade and a winning day with overnight with your strategy, the way you approach the next day also is a little bit different. So you have to kind of keep track of and journalize how you're performing each day with this overnight strategy in order to be able to be successful with it. Okay. So the whole premise of this overnight trading strategy is to do two things. One, it's to give people an opportunity to be able to make money while they sleep, literally while they're sleeping, which is really, really cool. And it's the other premise, and this probably is actually the most important thing, is that you're trying to take advantage of the market during the London session. So the London session opens at 3 a.m. Eastern and it closes at 12 p.m. Eastern every day. So by and large, the most active hours of the London session are while most folks are asleep here in the United States. And so if you want to be able to participate in the London session, you either have to be nocturnal and get up like an owl in the middle of the night, or you're going to have to find another way to trade it, which is what we're doing here tonight. So that's the whole premise of the overnight trading strategy, is to be able to capture all of that price action that happens during the London session. So obviously the London session has a lot of movement. In fact, 73% of all foreign exchange transactions take place during the London session. And so it's a lot of price action to miss out on unless you have something that trades for you. So obviously this is just one of many ways to do that. Last week we talked about EAs and copy traders. You guys all know that I'm into algorithmic trading. And so I have a lot of robots that will actually go out and take trades for me in my different accounts, during the night, which is kind of nice. So that's one way to make money while you sleep. And then this is another way. This one you have a little more control over, which is cool. And it's an actual strategy that you can execute. And anybody with, an Excel spreadsheet to keep track of their sequence and a trading platform could technically trade this. So it's super awesome. Okay, so that's very important context. I wanted to preface the strategy with that information because now it's going to make a lot more sense. So because the market moves so much during London, unless you have some kind of breakout opportunity or breakout strategy, you're going to miss out. And so that's when we came up with this. And it actually is very similar to if you guys have heard of the London breakout strategy, this is basically the London breakout, just the way we approach it is a little bit different. So you can actually Google search online, just like Forex London breakout strategy, and you'll find tons and tons of people who have different versions of basically what we're teaching. I just like the way that we do it because I feel like we get an extra edge with the way we approach the risk management. So it's a little bit different. I'm going to pull up this sessions indicator. So this is really nice. Sessions is a cool indicator that you can get on TradingView. It's free. I like it because it points out where the different sessions are. There's 4 different sessions. You've got the Sydney session, you got the London session, you got the Tokyo and the New York session, right? So the Forex market's open 24 hours a day. But there's certain sessions when certain currencies and currency pairs are more actively traded. So, for example, during the Sydney session, the Australian dollar, the New Zealand dollar, they're more active during that period. Something like the US dollar and the Canadian dollar is going to be a lot more active during the New York session. You've got the London session, which obviously the British pound, the euro, Swiss franc, those are going to be more active during the London session, right? So that's why when we're trading this strategy, the London breakout, we're looking to trade currency pairs like the euro because it's going to be likely going to have some kind of form of a breakout. Now, the other reason why I like this is because our evening here in the United States is right in the middle of the Sydney session. So Sydney's going on while everybody's having dinner, watch Netflix or whatever they do in the evenings, right? So that's what's going on in the markets. What's the euro doing? What's the pound doing? What's the franc doing during that time? Usually they're pretty quiet. They're not moving much. And so, in fact, if you look at this, here is a chart on the euro dollar. And if you look, you'll probably notice that the market's pretty quiet during this blue area right here. Doesn't move a lot. Right here, here's another blue area. That's the Sydney session. Okay. Here's the Sydney session over here. Here's Sydney over here. What happens if I turn this off and I turn on? In fact, I'm going to go to the settings here. I'm going to flip off Sydney and I'm going to turn on um, London. Okay. So I'm going to turn the London session on. And you can't really see it very well with the way I've got my screen. So let me go ahead and change the settings here to dark so you guys can see this. Okay, so there you go. So probably you can see this a little bit better now. So the green is the London session. So what do you notice? Well, right here, that's pretty obvious. That's a lot of movement right there during London. Little bit of movement right here, not a ton right here, but right here, a ton of movement, right? So by and large, most of the movements that you'll see in the market on the euro are going to happen during this London session. And if you actually turn on, let's actually turn on New York as well. So you'll get an overlap of New York and London. You'll probably note that New York and London, so in the yellow area, that's probably when things are going to be most active, is because that's when they're mostly, yeah, there's the overlap right there. A lot of movement. Here's the overlap, overlap. Here's the overlap right here, right? So in general, that's what you're going to see. It's not always, perfect, but that's the general idea that I'm trying to point out. Okay, so I'm going to go back to the settings. Now I'm just going to turn on just the Sydney um, box right here, the Sydney session. Well, why do I just want the Sydney session? I'm going to go ahead and go back to my white background. I prefer that. It's just a preference I have, so I'm going to change that back to white. Now, why do we focus on this Sydney session right here? So Sydney's kind of a unique thing because it's the session that just precedes the London market opening, right? So if London's going to open, um, um, there's going to be an increase in activity, volatility, right? And so I call this the Sydney box right here. So the Sydney box is special because it's where the market usually is the most quiet. It doesn't really move that much. Okay. So the London breakout, what we do with the London breakout, the most traditional way is to do something like this, where you put a buy above the box, at the top of the box right here, and you put a stop loss on the other end of the box, and then you'll typically ride this out for like 1 to 2 or 1 to 3 or something like that. That's a traditional London breakout trade. And then what most people will do is they'll put a short position on the other side. So they'll put a stop loss on the other end of the box, and then they'll ride this all the way down, or however they can take it. So that's a breakout right there. Okay, so the idea is when the volatility comes into play, you can write it up or you can write it down, just whichever way the market goes. Sometimes it's not going to do a lot. Sometimes it's going to go up and then it's going to go down. Um, um, Sometimes it's going to go up a little bit and then it's going to go down a little bit. Um, and that's what we call a whipsaw when the market goes up and then goes down. You typically with the London breakout, what I've noticed is you're going to get a whipsaw about 2 to 3 times a week. So about half the time you're going to get a whipsaw. So it's pretty common. I'll show you what the other, there's a few other scenarios, but yeah, half the time you're just going to get a flat out whipsaw, which is kind of annoying, but that is just kind of the nature of the strategy. Um, but you'll have nights like this right here. I don't know what night this was. This is on May 24th. If I put a box around this, it breaks out pretty cleanly. So here's the Sydney box, and the market broke out of the Sydney box right here, broke to the upside, and you can see how far that went. Big time. That went big time to the upside. So, like I said, traditionally, most people put their stop loss on the other side of the box. What I've been doing with you guys is I do it halfway through the box. So, if this box is about 11 or 12 pips, about 5 to 6 pips down, so about right there, that's going to be my stop loss. So, I like to do it about halfway through. Okay. So, I don't think there's a huge need to have a stop loss throughout the entire box because the way I trade this strategy is I'm looking for the most clean breakout possible. I'm looking for a market that's just going to go, 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 go pretty hard. That's what I'm after with this little strategy of ours. Okay. So let me show you guys how to set this up. So I'm actually going to do a rewind to this date. Let's go back to May 24th right here. So what I do is I wait till the end of Sydney. So let's say I'm looking at this. When is end of Sydney?
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Now, you don't have to wait till exactly the end of Sydney. It's a tough thing. I think I see a question for this. Roger asked a question, so I'll get to this right here. But basically, end of Sydney is at 2 a.m. Eastern. So for a lot of folks, that's pretty late. Like 2 a.m. Eastern, that's too late to stay up, right? So you can actually set this up several hours before because usually the Sydney session will do most of its activity. It'll have most of its volatility in the first several hours. And Sydney opens at 6 p.m. Eastern. So by the time 9 or 10 o'clock rolls around Eastern time, it's probably ready to draw your box. In fact, that happened right here on the 24th. Basically about halfway through, or even, yeah, 3 or 4 hours through, it had basically made the entire box here. And then it just went a little bit further. About halfway through the box, it was about that big. And then by the end, it had just gone a little bit further. If you have the luxury to stay up till the end, for me, it's a little bit easier because 2 a.m. Eastern is my 12 a.m. So some nights I'm up till 12 a.m. and it's not a big issue to just set it up right at 12 a.m. and then go to bed. But some nights I like to go to bed at like 10, So if I'm going to go to bed at 10, then I don't get to sit through the whole box. And so I'll just have to set it up at 10 o'clock, and put it in. So I'm not gonna say so let's see. Roger says I've been taking these trades between 10 and 10:30 p.m. Mountain. I am I at a disadvantage because I can't stay up any later? Um, yeah, I mean I think the ideal scenario is if you can stay up till the end of Sydney, but I don't think it's a deal breaker. Now, here's one condition I wanted to make, like here's an anomaly that I want to share. If your box is smaller than 10 pips on the euro dollar, because that's the pair we've mostly been using, you can do this on other pairs, but it's mostly been on the euro dollar. If your box is smaller than 10 pips, I would force it to be at least 10. Okay, so let's say that the difference between the bottom and the top was 8 pips. I would force it to be 10 because I never want to have a stop loss that's less than 5 pips. Okay, so that's way too small. Your stop loss is way too small if it's less than 5. So 5 is like my minimum stop loss. Okay, so I mean some nights I've seen this box get as high as 30 or 40, which is kind of a big box. That's a pretty big box to have. And so that's easy. Just half of that box is, 15 pips. So your stop loss is 15 or your take profits 20. That's not as common. I think most of the time my stop loss is like between 7 and 10 pips is probably the most common thing. Um, yeah, that's it's a pretty tight stop loss if you think about it. But okay, so oh, yours was 3.5 last night. Yeah, yeah. Oh, that's good to know. Yeah, very good. Yeah, no, force it to be at least 5. So if your box is like, if this is only 8 pips or 7 pips, then I would force this, maybe bring this up a little bit up there, maybe bring this down a little bit down here so that it's at least 10 pips. That way, if the middle of this box is right there, if you stop out, you'll at least have a 5 pip stop loss. But 3.5 pips, you're almost guaranteed to get stopped out at 3.5 pips because it's even the spread could get you at that. I mean, could probably wouldn't, but it's pretty close. So yeah, 27 pips is fine. Yeah, yeah. If it's 27, if your Sydney box is 27 pips, then half of that's going to be about 13 or something like that would be fine, 13 and a half. And that's a perfectly great stop loss to have. Okay, so if this were us and we were setting this up together, okay, I'm going to measure this out real quick. How big is this box? So it is actually, I just readjusted it. Let's fix this. So this is the box right here. How big? Oh, yeah. How big is this box? What's the difference between the top of the box and the bottom of the box? It's like, yeah, 11 pips. So that's about close to the minimum. So I would need to have a 5 or 6 pip stop loss on this would be fine. In fact, I might even just to force it to 12, I might even just bring this up a smidge like that so that I could have exactly 6 pips as my stop loss. Um, yeah, let's see, that's closer to 12 right there. Perfect. So now my box is about 12, and I'm going to put a 6 pip stop loss in. So that would work just fine. Um, okay, so from here, the thing that you got to do next is you got to place your long position and your short position. I like to set up a mock long position, a mock short position, so I can get my pricing in. So if I set this up on TradingView, if I put a long position right here, it's pretty easy for me to figure out what my price is going to be because I know what my entry is. It's going to be right there at the top of the box. It's going to be a buy stop order. And then my stop loss is going to be about halfway through at about 6 pips right there. And then I'm going to put this target. I do a 1 to 3. I'm going to show you guys later some back testing that I've done that I think you guys will really like. And I think you're going to see some really cool things with it. I found some pretty cool things that were really interesting. So I'm going to put this at 1 to 3. So I do a 1 to 3 RR ratio. So the idea with this trade is that you're trying to make 3 times the amount that you potentially could lose. Okay. And then on the other side, you're going to do the same thing. I'm going to put a stop loss at the bottom of the box, or excuse me, a sell stop at the bottom of the box. I'm going to put my stop loss about halfway through. And then I'm going to go ahead and bring this target about 1 to 3. By the way, how do you find this on TradingView? How do you get these tools? How do you get this, how do you get this, how do you mock up a long position and a short position? It's pretty easy. Over here on the left-hand side, there are these tools. Yeah, drawing tools. It's right here. It's called projection. So long position, projection, short position. And then I've starred them. I put a star on them so I can just grab them because I use them so often up here. I just grab them and pull them down each day that I need them. So this is actually ready. So like this is I mean we haven't taken the trades yet, but this is great because you can see over here, here is my take profit on my buy. Here's my entry on my buy over here. Here's my stop loss over here. What's that first red number is my stop loss. And that's the stop loss. And basically they have the same stop loss. The buy and the sell has the same stop loss. And then over here is my take profit on the sell. Okay, so let me, before we show you guys how to take these trades, here's the goal with this. What's the goal overnight? We want to see the market break out. So pretty soon after this, what's going to happen after we set this up? London's going to open up and the market's going to break out one way or the other. Okay. So the market's either going to break up or it's going to break down. Okay. So in the case that it breaks down, we're going to trigger into a sell position and hopefully it just continues lower. That's the ideal scenario is that just goes straight to the bottom. We hit our target and we live happily ever after, at least until the next day, right? So that trade, that's the ideal scenario. Or let's say the market opens up, let's say London opens up an hour later and the market shoots on up to the upside. Okay, that's great too, because we've got a buy stop right there and the market can go straight up. And if it hits our target, we make a 1 to 3. So it's all good in theory, right? So let's talk about, I mean, that's the goal, right? So what are the downsides to this? So the downside, the worst downside, and this does happen like I said, 2 to 3 times a week, this is going to happen to you. Okay. So it's pretty common. So be ready for it because it's annoying and like practically every day it happens, it seems like, and it's totally normal. So if you're feeling like this has happened to you a lot, it's because it is part of the system. Like there's no way around it unless we change the strategy completely. But sometimes the market, what it'll do is it'll do something like this. It'll fake the way up. It'll go up, trigger us into the buy, and then it'll reverse and it'll actually hit the stop loss on the buy. Then it'll come down, trigger into the sell, and then it will come back up, hit the stop loss on the sell, and then it can do whatever it wants at that point because we've already stopped out, right? So that stinks. That happened to me last night. It happened to me the night before. Um, yeah, it's pretty common. It's like 2 or 3 nights a week this is going to happen. And so you might even be like, why would I even trade that, Steve, if it's going to do that? Well, there's a reason. Like you're going to see here when you follow the sequence, like it is a valuable strategy, even though that happens quite often. But that is the worst case scenario is that you lose both directions. So, and it's kind of a heartbreaker. Like if your hopes and dreams are based off of that trade, when you wake up in the morning, then your day might kind of you might have a rough day. So you don't want to let your day be determined by how this goes, because actually, real quick, this strategy has a 25% or 29% win rate. So it's in the mid to high 20 win rate. So it doesn't win all that often. Okay, so you're going to hit a win every 3 or 4 trades. You're going to hit a win. Okay, so it's not all too common. And you might be like, why would I trade a strategy like that? It's so different, I know, but it's crazy because the thing is, you're going to see here in just a moment, but the strategy has a very, very high average win to average loss ratio. So because the average win is just so much more than the average loss. That's why this strategy works. Okay. It wouldn't work otherwise. You would not want to touch this strategy otherwise because it would just lose too often. So sometimes in order to be profitable, we have to sacrifice our win rate. And this is something that a lot of retail traders just don't even understand. They don't understand that you have to sacrifice winners in order to get bigger wins. Okay. Sometimes we just try to win all the time. And if we just try to win all the time, we might be winners, but we won't be profitable. So the whole point of this call is to help everybody become more profitable. And so that's what this strategy is trying to do, is help you become more profitable, not necessarily right about the market. Okay. Because we don't even really care which way the market goes. We just care that it does move during London. And when it does break out, we want to take advantage of this. Okay. All right. So let me show you another scenario. So that's the worst case scenario. Another scenario that stinks is you could have something like this where the market, maybe it goes down, it triggers into the sell, but then it goes back up, hits the stop loss, and then it continues down for the rest of the day. On that case, you just lose one trade and then the other trade doesn't trigger. And it kind of stinks because you were in the right direction. You know, the market went in the right direction, but it still lost. Okay. So that's another scenario. I'd say that scenario maybe happens once a week. It's not as common. And then once or twice a week, you'll hit a win. Okay. So 1 to 2 times a week is pretty common. You'll have a winner. And usually what that looks like is the market will just go straight down or straight up when the London market opens, and you'll trigger into your trade. And by the time you wake up in the morning, you've already hit your take profit. Okay. Um, the and then the last scenario, this one's very rare. Like it'll happen once every 2 months, once every 3 months. And this is the absolute best case scenario. So we don't bank on this. You don't need it to make money, but it does happen very, very rarely. So don't plan on this. But it has happened to me many times over the last couple of years with some different breakout strategies that I've done. But it is nice when it happens. It's truly a bonus. The market will go down, trigger a buy or a sell, and it will win. And then the market will come roaring right back, trigger the buy, and then you win the buy. It's truly rare, but it has happened. Um, and it's just a bonus day. Okay, so just enjoy it because it's one of those like rare supermoon type of things. Um, yeah, so that can happen though. I had one like this in May. I think it was like May 9th. Um, May 9th or something like that. We had a day like that. So it was pretty cool. But yeah, like I said, about once a week, maybe twice a week, 1 to 2 times a week, you'll hit just a standard win. Standard win is just where the market goes up. I've actually had several days where, actually another day, an example, sorry, I'm going around with a lot of examples here, but this is actually pretty common with a winning day. You could have a day where maybe say the sell triggers, but then it loses and the market just rips to the upside. In that scenario, you lose the sell, but you win the buy. That's actually a pretty good day when that happens. I mean, I don't prefer it. I'd rather just have the market just break out cleanly. That would be nice, but it doesn't always do that. Okay, so how do you set this up? So when I'm managing my risk, I got to use a lot size calculator. I'll show you guys how to do that, but I have to do this thing called a sequence. Like I built this sequence on this calculator over here. This is my calculator, and this is where I keep track of how I'm doing. So what I've been doing with this is it's truly a strategy of working with risk management. Okay, so it really isn't about knowing which way the market's going to go. There's no edge to this strategy. Like it's literally just a risk management strategy. I mean, the edge we have is okay, likely the market's going to break out during London. Um, we're setting this up at a particular time to take advantage of that volatility. But outside of that, understanding of like just the markets themselves, it's just purely numbers. Okay, it's just a numbers game at that point. And the numbers are here in this chart. So you can see the wins. I've highlighted all my wins in the last month and a half or so. I've highlighted all my wins with this. And then I've highlighted my losses in red. So you'll notice there's definitely more. losses than wins. Um, and yeah, it's just standard. It's just normal. Okay, so with this, it's a 1 to 3 RR ratio. So if you win, you're going to make 3 times more than you lose. Now, that's not completely true, even though that makes sense. The reason why is because each day, if I have a losing trade, I slightly increase my lot size each subsequent losing day. So, for example, right here on this day, this was on May on June 5th. I lost both directions. I lost at 0.025%. The next day on June 6th, I lost both directions at 0.38%. And so that stinks. And then it happened again, actually on June 7th. I lost both directions and I slightly increased my lot size. And then it actually happened again, unfortunately, here on the 10th. I finally got a win on June 11th. On June 11th, I actually lost one direction, but then the other direction won. So this, like I said, this can take a little while to kind of develop, and you might be stuck in a sequence for a while. Like this one started on June 5th, and the sequence didn't end until June 11th. So we have to do this because if you don't increase the lot size each day, the numbers actually just don't work out. It's kind of a worthless little strategy, even though it's kind of a good idea. This is why actually a lot of people will give up on the London breakout, is because it's truly not profitable enough to make money on its own without kind of working the risk management. Okay. So you do have to do this. Otherwise, if you just try to keep the lot size the same every single day, you will just kind of spin your wheels. You might actually even lose a little bit of money if you don't move that lot size. So you have to sequentially move it. What I've been doing is I increased the lot size by 1.5 times. So you'll notice here my default contract is 0.25% risk. Then I'll increase it to 0.38% on the next day if it loses. If that day loses, I'll increase it to 0.57. If it loses after that, I increase it to 0.86. If it loses after that, I go to 1.29. Okay. And then the max lot size I'll go to is down here. It happened to me once in May. In May, I had to go up to 1.94. Okay. So I went to 1.94% on May 24th, and that is my cap. So you don't want to just incessantly increase your lot size perpetually. You do want to put a cap on this. So if I get to 1.94%, I just stay there. And my plan is just to stay. Currently, my plan is just to stay at 1.94 until I do get a win. Um, I think in the future, though, I've considered about maybe just going back down to my default. So just because I don't want to let that loser get out of hand. Okay. So that's kind of something I'm debating with right now, but that's been my cap right there. And so basically, in order to get to 1.94, you'd have to have, let's see, one, two, three, four, five, six losing days in a row in order to get to 1.94. Um, yeah, you'd have to have 6 losing days in a row. Um, yeah, and I've had that. Well, I had 5 days losing in a row, and then on the sixth day, I finally got it. So you can see it kind of takes a lot of discipline. Like, this is not for everybody. Some people might look at this and be like, you know what, that's not my style, and I get it. You may not like this. But for other people, this is great because it's so easy to follow. Like it's something you really, if you know kind of what you're doing and you know how to set this up and you're disciplined to set it up, it's one of the easiest things to just set up every day, so long as you're disciplined to get it in. Um, Not too bad. Let me read some of these comments here. So, let's see. Um, Paul says this is a fun, useful tool with the market times and typical volumes. Nice. Appreciate you sharing that. Roger says I tweaked my sequence. Oh, nice. Okay, so you start at 0.125, then go to 0.25, then the 3.75. Okay, nice. And you cap at one. Nice. Very cool sequence. I like it. Yeah, you got one, two, three, four, five, six, seven, eight in your sequence. Okay, so you could go up to 8 times. Very nice. That's not bad. I'm actually going to show you guys some other sequences I've put together. I've back tested a few. You're gonna love it. So just hang on because I got to make sure everybody knows how to trade this first, and then I'm going to show you the different sequences I've put together and back tested. Um, but yeah, I'm actually a little bit on a losing streak right now. I my last winning trade was Friday. So Friday I woke up to a profit right here. It was a nice little trade. Um, it covered all the previous day's losses. It was great. But now I'm a little bit on a losing streak. Unfortunately, haven't had a win this week yet. So hopefully tonight I get that. Um, if not tonight, then hopefully tomorrow. So yeah. Okay, cool. So it's important to follow the sequence and you can kind of see the progression of this over time. So like back in May, this is where the account started. It was a 100K account and you can kind of see the sequence going through. So, the first day it had a losing trade, but it also had a winning trade, and that winning trade um, brought the balance up. And so you can kind of see the balance grow over time. Um, yeah, you can kind of see it just kind of grow, grow, grow with its pullbacks along the way. Um, so the pullbacks, like for example, I had a high point right here on Friday. My account balance was at 108,766. And these are the profits that I had made since the beginning of May. Since I've had a little bit of a drawdown since Friday, my profits are now 6,573. My balance is 106,573. So in order to get that back, I need to have a win here tonight or tomorrow. Hopefully that's coming soon, and then I can get that all put back together. Once I get a win, I go back down to my default contract size. So if I get a win, like for example, right here on Friday, I had a win. So Sunday night when I set this up, I went back to my default contract size right here. So June's been a little bit sparse. In June, I've only had 3 wins actually, and it's June 19th. So it's been a little bit sparse this month. Nonetheless, though, each week there's been a win. There has been a week in every single week. So, like, if you look at this, June 4th had a win right here, and then June 11th, then a week later had a win, and then also last week I had a win on the 14th. So I guess there was 2 wins last week that helped out. But yeah, we're due for another one this week. I'd love to see some back-to-back days of wins. That we've had days like that, like May 30th and May 31st. Those were back-to-back wins. Um, and then on May 15th and May 16th, those were back-to-back wins. May 9th was actually the day where I hit both directions. I won both sides, which was cool. And then May 2nd and May 3rd were back-to-back wins as well. So that's pretty awesome. By the way, I didn't welcome everybody here. Well, I did welcome everybody here. I just didn't welcome all the new folks. If you are new to the program, let us know what state or what country you're from so we can welcome you here, so we can say hello to you. Also good to see everybody. All those returning long timers. Good to see everybody here today. Appreciate you guys coming. But yeah, let us know what state or what country you're from if you are new to the program. Okay, perfect. So like I said, tonight I'll put in a new thing in here. So what do I do with I got to show you guys how to do this. So if I'm taking this trade here tonight, let's say this is today's trade. What I'm going to do is I got to put a stop loss in for each trade, and I got to put in a lot size that's appropriate. So since we know that this is about 6 pips between my entry for each trade and my stop loss for each trade, I'm going to go to the lot size calculator or the position size calculator right here. I use this one with my FX book. I'm going to come over here and I'm going to I'm going to fill out the fields here. So I'm trading the euro dollar typically. You can trade any pair you want really, but I think the euro dollar is a really good one. So I just stick with it. I'm going to put in my account size. It's about $100,000. I'm going to put in my risk ratio. So this is important because you have to come get this from your sequence. And right now, like if I were to trade this tonight, I'm going to do a 0.86% percent risk per trade in my sequence. So 0.86%. I'm going to put in my stop loss. And it's going to be about 6 pips. And I leave the trade size just 1. So I just leave that there. So this is going to require a 14.33 contract. These are big contract size. You'll notice that. These are pretty big, decently sized trades. They have very small stop losses. So yeah, you are taking some pretty monstrous trades otherwise. Um, it's still, still a fixed amount of risk. Not fixed, but it's how much you're risking. Um, but yeah, because of your stop loss, but it is a pretty big trade otherwise. So this would be the lot size I would use if I were trading this account for tonight. And my stop loss were 6 pips. This is what I'd put on each side. So the buy stop's going to have, that 14 contract buy and then a 14 contract sell. Um, and then I think that's, yeah, I mean, any questions on how to set this up? I mean, that's pretty much it. And then, if I were to set this up exactly like I just said, and today if this were today, and then we watch the market kind of do its thing, you can see here exactly, that's exactly what you want to see. This market came up, London opened, the market broke out, it hit the take profit, you're done. Okay. And you'll just wake up to your result typically. There are a few nights where you'll wake up and you might be in a trade or two. And I just let those trades run until the next night. So I don't do anything with them. I don't close them when I wake up. I just let them go. Yeah, to the next night. Okay, so let me show you guys in the journal here. I've done some back testing. So this is my current journal. This is what I'm using to not back test, but to forward test. So as I trade, I put in results. This is what I've been putting in. And yeah, so far it's been pretty good. So this is 1 to 3 RR on the euro dollar at a 1.5 multiplier each night on the risk management. Now, I changed this up. Now, I found if you actually okay, so if you actually um do a 1.5 multiplier, which is the same as what we're already doing, but you change your RR ratio to 1 to 5, the results are actually pretty outstanding. Okay. Your win rate does go a little bit down. You can see right here the win rate is 22%. Now on the 1 to 3, the win rate is a little over 25%. So you are going to lose a little bit with your win rate if you go to 1 to 5, but it's really not that much. I was surprised. Like we didn't lose much there. But where you really see the money come in is when you do win, the average win is just so much bigger. So look at this. The average winning trade is $3,324. The average losing trade is $530. Okay, so this is why you can make this work. Okay, so look at this. The gross profit is $30,000. Gross loss is a little over 16,000. So the net is $13,000. Um, and so that's why this works. A lot of people might look at this and be like, "Well, I don't want to touch this. This is only 22% win rate." But the thing that they forget to see is the average win is just so much bigger than the average loss, right? And so, if you're getting that kind of average win, um, um, you can absolutely afford lots of losing trades. So this is pretty cool. I like this. You can kind of go through this. It says, Steve, can we get a copy of this overnight trading journal? It has a bunch of more useful columns I'd like to track. Yeah, absolutely. I think I actually give this out to, yeah, it says anyone with link has a link to access, no sign in required. Let's see. Let me just make sure it's viewing mode because I don't want anybody to edit this. It should be, yes, should just be viewer. So let me go ahead and share this in the chat box. You guys can all bookmark this journal here. Absolutely. You guys can use this. You won't be able to edit the uh, anything in here. You can't come in here and just be like, okay, I'm gonna edit these numbers. But what you can do is if you want this, you can actually go to File and hit Make a Copy right here, or you can download it in Excel. So that would work just fine too. All right. Cool, guys. So in here, let's see. So here's 1 to 5 RR, and results are a lot better as far as like a dollar amount goes. You do lose a few trades. You won't have as many wins, but it's still really, really good. Okay, then I tried it this way. Here's a very conservative approach. This one's like super conservative. So instead of doing a 1 point, let's see, what was it? A 1.5 multiplier. This one's just a 1.25 multiplier. So you're barely increasing the lot size each day. It's like very steady, very slowly increasing the lot size. But this one is a 1 to 5 RR ratio. And so instead of 1 to 3, it's 1 to 5. And you're only increasing the lot size by 1.25% each day. So here's the sequence with it. Right here, this is actually the biggest contract we ever got up to. Was it right here on the 24th? Um, yep, I think that's it. So it started at a 0.25 contract, then it got to 0.31, then it got to 0.39% risk, then it got to 0.49, then it got to 0.61, and the highest it ever got to was 0.76. So it never even got to a 1% risk at a 1.25% multiplier. Okay. So very, very low risk setting on this one. 1 to 5 RR ratio. So you're trying to get 5 times what you're risking on these trades. This made a little over 5% from May 1st to about June 12th. Okay. So it's not a huge like we're not talking about like massive gains here. This is very steady. This is a slower approach. Um, but like if it ever concerns you about getting a lot size that's too big, like if it concerns you about seeing um like if you're concerned about seeing the percent risk getting too high, because I know that's a big concern. It's probably the biggest concern I get as well for myself. This is probably the approach to take because the highest I ever got in the last month and a half was 0.76% per trade. And then that finally won at that 0.76 level. So you'll kind of notice, like, for example, let me kind of show you like what this looks like. So let me do a calculator. So this was my worst season right here. I think ever between May 20th, no, May 21st. No, it was actually May 17th, all the way up to here. This was a win right here, but it wasn't a big enough win to cover the previous day. So we continued the sequence on this day. So the fact that you guys see this as a win and we continued the sequence, it's because it wasn't a full win. Okay, so that's what's going on right there. All right. All right, cool. So let me show you this. So if you take um this loss right here, so minus 250 and then minus 310 and then there was a plus 276. Well, I'm just following the sequence up and adding this together and then a plus or then a and then you'd had a minus 390 and then a minus 390 and then there was a minus 490 and then another minus 490, then there was a minus 610 and then another minus 610. So with this one, and then finally we had a win and it was plus $3,800. So it took several days. Like this is kind of annoying right here, this sequence, because it took from the 17th to the 24th of May just to make $536. So it's kind of an annoying sequence. You're going to have sequences that are annoying that way. And you're really not, because the more you go, the longer it takes to get that win, it diminishes the possible, like the profits that you're going to make. It just diminishes it over time. So you really don't want to have these losing days um, go too long because if they persist for many days, it diminishes how much you'll make on the back end. So what I like to see are times like this where like May 5th, May 1st, there was a win. And then just 2 days later, there was another win. So that's actually kind of perfect right there. This is actually not bad right here between May 6th and May 9th. Not too many losses in between. And then you finally got that 1 to 5 win. And it just completely covered all of this loss right here. Easily covers that. So this is the 1.25 multiplier. You also have the 2x multiplier, which I haven't finished my back test on the 2x multiplier. In fact, this was actually live. The 2x multiplier was live back in May. My problem with 2x is that you're doubling each night, and I don't think doubling is a sustainable approach long term. I think you can get yourself into a heap of trouble doubling. So I wouldn't suggest that you do this. I'm just going to show you what this looks like. But the profits are kind of insane though when you double. But again, I don't think that you could do this and get away with it forever. So I probably wouldn't even start if you know that you can't do it forever, right? That's just my philosophy. Like some people might be like, no, it's fine. Like just make as much as you can while you can. But I'm like, well, then you're gonna have a point where you get onto a loss and you can't keep trading it anyway. So I just say don't even start if you know you can't finish it. So, but anyway, you can see the biggest trade I ever got doubling was up to 4%. That's a pretty massive trade. 4% risk is a huge trade. That means if the trade loses, you lose 4% of your account. Um, and that I was spitting bullets that night. I do remember that. So I don't think that that's sustainable versus like you compare it to the 1.25 multiplier and the biggest trade you ever got up to was only 0.76. That's less than 1%. Okay, so I think that's a lot more sustainable. But again, you're not going to make as much, but I think it's sustainable. Okay. Um, and plus, it's still a 5.5% return in basically a month and a half or a month and a quarter. It's as far as I've gone with this. Yeah, about a month and a half. So, if you were to do 5.5% every month and a half, then in a year's time, your account would be um, 40% more, 30 to 50% more. So if you had 100 grand, you'd turn it into 130. If you had 100 grand, you turn it to 150. And this is a very, in my opinion, very conservative setting. I think you could do very well with this one. So anyway, give this some thought. So you can kind of see the different results, with this when you compare it. And then you've got this is the one that I'm currently using right here, the 1.5 multiplier at the 1 to 3 RR ratio. And it's been going well. Like the results have been good. I wish they were a little bit better. Um, the reason why I think June's been kind of dumb is because I've only had 3 wins in June, but I've held my own even though I've only had 3 wins in June. Yeah, I've kept it together even though June's been weird that way. So hopefully, what I'd love to see is like a night like tonight have a win, and then tomorrow night have another win. So two back-to-back wins would really help fill that up and make that pretty nice. So, all right, guys. Well, I'm going to give ourselves like a 9 or 10 minute break here, and we're going to talk about the COT report. So that webinar will be in about 8 or 9 minutes. But I don't see any questions unless you guys have other questions. I'm more than happy to answer those. Let's see. Paul says if I want to move one of my accounts to the 1.5 X, yeah, you could definitely do that. Oh, how should I transition? Great question. I would say whatever model or sequence you're using right now, once you get your next win, then go ahead and transition to that. Yep, definitely go ahead and transition to that. Once you get your next win. The only thing I'd say is if you are using the 2X, like I said, I wouldn't recommend the 2X. I don't know if that's the one you're on, but it's just a lot of risk to be taking, and you could wind up having to take some massive trades, and I think it could really hurt your account if things don't work out. So plus you got to put a cap on it, and your cap would have to end faster. So I put a cap on the 1.5. You guys know my cap is right here. It's at 1.94. So, oh, you're talking about the RR ratio. Okay, great. No, you're good. You're good. I was worried that you were 2Xing. That's good. So, what I would do is I would wait till you get your next win. Actually, no, if you're keeping the multiplier the same, you're probably good to just keep going. So you could even change that tonight if you wanted to. You could do the 1.5 multiplier and the 1 to 5 RR. Yeah, so That's an easy way to remember it. 1.5 multiplier and 1 to 5 RR. That seems to be the one of the best ones. I like that multiplier and I like that RR ratio. It just makes the wins super, like, they're juicy. Like those are really, like, here's this one right here on Friday. It was $6,450. It was just, wow, amazing win right there. Um, and it just completely bottles up in the previous losses. And that one had a string of losses too. Like it lost here all the way up to here, and it just completely covered it. So, all right, guys, I'm going to go ahead and wrap up. Appreciate each one of you. Thank you for coming, and we'll see you guys in the next webinar.